Good afternoon, everyone. I'm Dan Hussey with Zaner Hedge, bringing you a strategy of the day update here for August 9th, 2023. Remember, trading futures involves risk and is not suitable for all investors, and everything I talk about here today is just my own opinion and not a direct trade recommendation. But if you are interested in turning these ideas into trade recommendations or seeing a little bit of what more of what I go over on a weekly basis, click on those links in the comment and information section of this video to get signed up for the Strategy of the Week webinar, or click on one of those links to get our daily call in over here at Zaner, which is replacing our newsletter. You can hear from Ted Seifried, or a member of our team, every morning with a little 5-minute segment, kind of like a radio spot of information about markets pertaining to the things we want to hear. So I've got a chart up here in front of us, Novi Beans. I actually wanted to start with the daily chart of November Beans, because this is where I kind of see a reversal potentially underway, and even maybe a trade idea happening, and even into today's support. Daily RSI, we're very oversold, and we've been oversold, right, for some time now, for the last couple weeks, really since July 27th. So the longer market stays oversold, and the higher probability, in my opinion, you get a short covering rally could ensue. And if you look back on this chart, here's another instance where we were oversold for a couple weeks here back in March. The market, of course, continued from 1320 all the way down, actually very similar levels. But once the oversold condition was unwound and we went overbought, the market had rallied from a 1250 low up to 1340 high. So there's a 90-cent rally, right, in that short covering rally that could ensue. So, I mean, you imagine that could take a market like where we are now all the way back, back up to 1366 and above, to test that 18-day moving average, which we broke below, and that was the day we went oversold in the daily RSI, and the market stayed oversold for a week. And that's why the first little notion of overbought or oversold usually isn't a reversal signal, right? It spends time in an oversold condition, pressing further. But this pullback in the Novi Beans, found support into the 155-day moving average, both of which, by the way, we had one of those golden or bullish crossover that happened here earlier this week. The 55-day was dragged back above that 100-day for the first time since they negatively crossed back in March. And if you notice, from the full or the 1129 low to the highs after there, 1430, the market has pulled into a full 50% retracement. That low here of Friday at 1282, which, heck, let's bring up now that 4-hour chart and take a look at that full 50% retracement that I'm talking about. It's drawn from, again, this low down here at 1129 up to the 1435. You can see that 50% here at 1282. Market pulled right back into that level. We've gotten a 2-day bounce off of it. Got a little rejection from a bit of a trend line resistance here today up at 1323, but the market still closed and finished positive. It was still a higher high and higher low, and now we're up to potentially, I think, with a target towards this 1330 open gap that we have on soybeans. So if the market stays above $13, right, we see a bigger level bouncing and holding, maybe forming some kind of technical low. We have a level, this 1324, 23 highs of today, level as a kind of a breakout, in my opinion, level that could lead to a gap fill at 1330, and maybe even higher than that at the gap fill towards 1382. Which, okay, if we start to head higher, you got to at least consider 1435 highs to lows, that swing. 50% retracements at 1359. It's interesting how the 6-to-8 line aligns with that 1382 gap fill. So it's almost like if the longs can gun and target that gap fill, that would be their kind of, in my opinion, that would be the reversal signal that means beans, right, can now put pressure in 14. And hey, if they want to go higher than that, right, they could. Nothing's stopping them from going to a new contract highs. They step out to a daily chart here. There we go. Above 1448. If it were to really break out, there is technically two full 50% retracements on these charts with upside targets, towards 1592 and 1500. And the question is, are beans building towards that already on the chart, perhaps? But there was a short-term reversal, and you don't like seeing this old support, from July through mid-August that was holding and failed, now hold as resistance. So getting through today's high becomes very important for the continued upside trend. And, I think short carving to 1366 to get back to the 18-day moving average on that, as well as, the two gap fills above. It all seems very logical if that's the way this market's going to trend. So a little bit of a fight over the trend can still happen down here. We haven't totally given the total green height for, the breakout having happened, but bulls have a reason and a few levels now, I think, against the lows of today and the lows of Friday there to think about risk management, right, for new longs or for positions that are looking for moves towards, 1330, the gap fill, 1366, 18-day moving average, reversion to the mean there, or, the 1382 gap fill. And of course, that could all mean swings that take us up higher, but I think there'll be a lot of up and down before we get to 15 bucks and a whole weather market here in August for soybeans. December corn. Fight over $5 here, very similar to last year's fight over the $6 threshold. It was into this WASDE report where the market actually kind of started to rally a little bit and then kind of got follow through thereafter. A little worried here for December corn that we don't have, and we haven't seen that rally begin, and we are now just kind of entering, or we've been flirting around in an oversold condition, basically against the low end of the range here that we've been in since May. Arguably December corn doesn't really want to break below 5, at least it hasn't on the chart, since last May. It spends no more than a couple weeks, or, I guess it got us no deeper than 19 to 20 cents below there before coming back up, and it has had two opportunities to break, one above 6 and one above 550, so two above 550 here, just in that time period, right? And we all know where we were before. But the point being, the point is that there's a significant low here from the middle of the summer, down at 481. If we're going to see a repeat in the kind of seasonal trend that we saw from last year between now and October, which was a rally into then a small top that found then a new harvest, kind of low, and a harvest pullback, I should say. Because I do think there will be selling pressure on the way up here for corn, people taking advantage of the opportunity that they didn't before. And of course, right, the fact that we actually are probably going to have a decent crop relative to what we thought before, right? There was definitely rain, and there's definitely been some good recovery weather this year, and never that baking 100-degree heat, unfortunately, right, en masse, right? They definitely got hot down south, but we only had a few warm days up here, I know, in Illinois, and we certainly didn't see the 2012, right, type weather situation is what we're really discussing here. But, does that mean that corn should be a $4.50 or $4 crop? I don't know. I think with what oil's doing and other, demand there that we're seeing, there's certainly reasons to question that. But the year's not over. The USDA has something to tell us on Friday, right? So we'll see. All of our moving averages are above us, so there's not much to say other than it is higher highs and higher lows for 2 days running now in December corn, even though it was a negative close today. What can you say? There is a bit of an open gap above us here at 531. That's also about the 50% retracement from that swing up at 572 and the highs of July down to the lows of August now. It's interesting how those levels align too. It's very similar to soybeans, but we don't really have as much of a reversal here or much of, technical level and support other than this is just the low end of the range than we had before. And of course, what I'm fearful of is this period here in August is very reminiscent of this period at the start of July, where then we had one more capitulating sell-off before, an inevitable bounce. But that capitulating sell-off might actually break, a supportive level, and we could be hunting down to 450 or something. But yeah, it's support until it's not, right? And I think the lows of August so far are holding. And if we get above today's high and back above $5, I don't see much in the way of this chart to getting back to 530. And then if we're talking that, then why not back to 570, because it's been there before, and we've been up and down in that range for a while. And then, now we could talk about $6. But until then, 530 is my first upside target for corn if we kind of stay above $5 here, and certainly above the lows of August. But that's a big ask at this point. So, all right, everybody, thanks for joining me here for another Strategy Day update. Wanted to get paint a picture there on corn and soybeans into tomorrow, so that we can kind of continue this discussion. And then, of course, in that Strategy of the Week webinar held every Thursday here at 1:30 p.m. Central. Sign up in the links in the comment section and the information section of this video, and join me then, where I'll go over these markets and a whole lot more. Have a great day, everybody, and we'll be back with you as price action develops. Take care, everyone.